Ladies and gentlemen, thank you for standing by and welcome to JOYY Inc.'s first quarter 2025 earnings call. At this time, all participants are in listen-only mode. After the management's prepared remarks, there will be a question-and-answer session. I'd now like to turn the conference over to your host today, Jane Xie, the company's Senior Manager of Investor Relations. Please go ahead, Jane.
Thank you, Operator. Hello, everyone. Welcome to JOYY's first quarter 2025 earnings conference call. Joining us today are Ms. Ting Li, Chairperson and CEO of JOYY, and Mr. Alex Liu, the Vice President of Finance. For today's call, management will first provide a review of the quarter, and then we will conduct a Q&A session. The financial results and webcasts of this conference call are available at ir.joyy.com. A replay of this call will also be available on our website in a few hours. Before we continue, I'd like to remind you that we may make forward-looking statements, which are inherently subject to risks and uncertainties that may cause actual results to differ from our current expectations. For detailed discussions of the risks and uncertainties, please refer to our latest annual report on Form 20-F and other documents filed with the SEC. We will also discuss certain non-GAAP financial measures. They are included as additional clarifying items to aid investors in further understanding the company's performance and the impact that these items and events had on the financial results. The non-GAAP financial measures provided above should not be considered as a substitute for or superior to the measures of financial performance prepared in accordance with GAAP. You may find a reconciliation of the differences between GAAP and non-GAAP financial measures in our earnings release. Finally, please note that unless otherwise stated, all figures mentioned during this conference call are in US dollar. I will now turn the call over to our Chairperson and CEO, Ms. Ting Li. Please go ahead, Ms. Li.
Hello, everyone. I'm Leking. Welcome to our fourth quarter 2025 earnings call. 2025 makes a key milestone for both JOYY and for me personally. JOYY has just celebrated its 20th anniversary, growing into a global technology leader with a sizable, engaged user base worldwide. We diversified growth strategy is yielding clear results as non-live streaming revenue continues to expand rapidly, affirming the strength of our business model. As 2025 makes my first complete fiscal year as CEO, I'm excited to outline our medium to long-term strategic vision and operational roadmap as we advance into our next decade of growth. First, looking at our quarterly performance, we recorded total revenue of $494 million in the first quarter of 2025. Our non-live streaming revenue reached $123 million, a year-over-year increase of 25.3%, with non-live streaming revenue accounting for 25% of the group's total revenue for the first time. In the first quarter, we achieved a non-GAAP operating profit of $31 million, a year-over-year increase of approximately 25%. Meanwhile, we maintained strong operating cash flow, which reached $58 million. During the fourth quarter, we distributed approximately $49.1 million in dividends to shareholders. On top of that, we repurchased approximately $22.5 million worth of our shares as of May 23rd, reinforcing our commitment to returning value to our shareholders. In the past, we focused on expanding the global reach and the influence of our user community, leveraging our diverse portfolio of products, spanning live streaming, short videos, instant messaging, and more. We have successfully monetized our global user base through live streaming and delivered consistent profitability, which demonstrates our industry insight, operational agility, and strong execution. Over the past 2 years, we have stepped up our innovation to develop new revenue streams, achieving significant progress toward our growth objectives of cultivating a multifaceted ecosystem. Since 2024, our global programmatic advertising platform, Bigo has achieved remarkable growth. Capitalizing on our sizable global user base of approximately 260 million users, predominantly young and middle-aged internet users with promising purchasing power, we have attracted a growing number of advertisers. Bigo has further expanded its traffic pool by integrating premium publisher traffic with our first-party traffic, consistently delivering strong, memorable results for the advertisers. This success has fueled the rapid expansion of our advertising revenue, reinforcing our confidence to further diversifying and expanding our ecosystem. Looking at the full picture of our non-live streaming businesses, we believe that our advertising platform and smart commerce SaaS platform are also strategically complementary, driving synergy across the ecosystem as Bigo expands its traffic pool and enhances its data-driven targeting capabilities. It will empower merchants to scale its market presence through pieces and efficient customer targeting. This integrated approach generates significant value across our ecosystem and created a virtuous circle of growth for both Bigo and our smart commerce platform. Looking forward, we anticipate our non-live streaming businesses, including our advertising and smart commerce platform, will emerge as JOYY's second growth engine. Our initial accomplishments in these areas have been encouraging, and I'm confident that this multi-agent approach will establish a sustainable long-term growth roadmap for JOYY that will deliver major lasting value and enhanced returns for our shareholders. Next, let me share with you our latest business updates and operational strategies. First, our live streaming business. In the fourth quarter, the group's live streaming revenue was $371 million, with Bigo contributing $352 million, in line with our expectations. At present, we observe distinct regional divergence in online entertainment spending. Especially, users in developed markets have shown resilience, while those in emerging economics and the long-tail paying users have reduced spending due to economic headwinds. To address such trends, we've adopted prudent strategies, and efficient operational resource allocation. First, we are continuously optimizing our user acquisition strategy by prioritizing advertising spent on higher quality paying users in core markets. Second, we are fine-tuning our revenue sharing mechanism, particularly by streamlining underperformance agencies and channels that fail to deliver positive ROI. And third, we continue to strengthen our community content safety measures while improving content operations to boost user engagement. These strategic changes have already brought constructive results. While live streaming revenue has fluctuated temporarily, we have achieved a significant improvement in operating profit from our flagship product, Bigo Live. Despite this transitional phase, we remain confident in the fundamental interactive value that live streaming can offer to users and its monetization growth potential. To re-accelerate growth, our strategy focuses on two actionable points. First, we will continue to optimize resource allocation based on ROI and improve traffic quality, prioritizing user growth in core markets such as developed countries and the Middle East. Second, we will drive content, product features, and operational innovations to boost user engagement, improve paying users' experiences, and increase conversion rates. By better identifying quality users and improving payment conversion, we expect a resurgence in high-quality paying users, stabilizing live streaming revenue, and driving renewed growth. Next, let's look at the performance of our core product across key markets. First, the developed countries region. In the fourth quarter, live streaming revenue in developed countries continued to outperform. In particular, Bigo Live's North American region saw Q1 MAU growth exceeding 7% year-over-year. At the same time, the number of paying users in the region increased by approximately 4% QoQ. Next, the Middle East region. Ramadan in 2025 started earlier this year, with the entire month falling within the fourth quarter, which caused expected seasonal impacts. Even so, our products actively promoted a series of operational activities which drove regional user activity and helped boost our brand influence among our users. In the long run, the Middle East market continues to be one of our strategic priorities, given its strong monetization potential as demonstrated by top-tier ARPU and users' strong affinity for interactive live streaming and high engagement. We have remained a leader in the market, and we are committed to deepening our penetration in the Middle East through our expanding device product portfolio. Looking at product improvements, our teams have made important product feature updates that are creating clear operational benefits. In the first quarter, Bigo Live launched an entirely redesigned VIP benefit system and improved its gifting experience, upgrading gift features for high-value users. These efforts delivered a 3% QOQ increase in ARPU among Bigo Live's high-end user cohort. Leking also advanced its content strategy by building a more diverse and engaging content library. This led to impressive engagement metrics during the quarter. Videos viewed per user rose by 7% compared to the previous quarter, with overall video consumption time increasing by 10% over the same period. Our refined approach to top streamer management and development also produced a notable 3% QQ increase in Leking's average paying ratio during the quarter. In the fourth quarter, Bigo achieved approximately 18 million in advertising revenue, a year-over-year growth of about 27%. Here, I would like to share my insights into the macro and industry changes in the advertising business and how we plan to establish our long-term competitive advantage in advertising in the current environment. As you see, we believe JOYY's unique position to take advantage and current conditions of the advertising space to drive our long-term growth. First, the global macro landscape is highly dynamic, with major shifts taking place to advertising placement channels across key markets. Advertisers need placement strategies spanning both domestic and international channels to maintain and grow their market share. This change actually favors organizations with our unique profile, specifically those with both strong localized operations and extensive global reach. As such, we believe JOYY benefits clearly from these recent shifts in the advertising landscape. Our market insight, premium global traffic, and localized operations have helped us build strong credibility with advertisers. This trust has allowed our Bigo Ads platform to grow quickly, which has increased both our managed traffic volume and overall platform scale. Second, in this evolving landscape, advertisers now demand better returns from their placements, along with clearer measurement and proof of placement impact. Specifically, they want to directly connect their ad cost to revenue and profit growth. This means that more than ever before, platforms must find and engage specific audience segments and efficiently turn these interactions into measurable new customers. JOYY is uniquely positioned to meet these changing needs with our large user base of 260 million people worldwide. Our users include the key target groups for many important advertising categories, and we understand their behaviors and preferences deeply. This creates an advertising system with detailed user profiles that helps advertisers consistently reach their most valuable customers. Third, we are leveraging AI to transform our advertising strategy. The rapid advancement of AI technologies and infrastructure have greatly enhanced JOYY's capabilities, enabling us to capitalize on our diverse application scenarios and proprietary data assets. Bigo Ads use our extensive global audience and years of quality data to build its own virtual model. Integrating cutting-edge generative AI technologies, this has helped us build an intelligent end-to-end advertising platform that covers user insights, creative development, precise packaging, and real-time optimization. Our AI usage improves ad performance and ad returns while creating better revenue opportunities for our publisher partners. This success attracts both more advertiser spending and more publisher traffic, helping the Bigo Ads platform grow quickly. Fourth, our advertising business enjoys significant economic advantages thanks to our established global operational team, R&D capabilities, and our network infrastructure. In particular, bandwidth and network-related expenses, a key component of operating cost and advertising platform, are optimized through our global network infrastructure, originally but built for our social and entertainment products. This allows Bigo Ads to enjoy significant cost savings. As our advertising business scales, our server cost per unit decrease across the company, steadily enhance overall operational efficiency. In summary, our advertising business has delivered consistently strong growth in past quarter and continue to be profitable to the company. This success comes from our local operations, our advertisers and user base, our industry-leading algorithm, and our global network infrastructure. Given this proven strength and our growing market position, we are confident our advertising business will continue to contribute to growth in our revenue and profitability over the long term. Now, moving to our thoughts on capital allocation. With the preliminary progress that we made diversify our businesses, we are actively monitoring our business development and resources and carefully assessing long-term capital allocation opportunities to support our non-live streaming businesses. In short term, we expect prudently expand handhelds and the marketing resources to support our advertising business while maintaining healthy profit margins. In the medium to long term, once our non-live streaming business reach a certain scale, investment in infrastructure upgrades, technology development, talent expansion, and marketing efforts are all potentially high-return capital allocation options. We aim to extend our competitive advantages through efficient capital use. On shareholder returns, JOYY has established a consistent track record of delivering returns to our investors. Looking forward, with our live streaming business stabilizing under the rising revenue and the profit from advertising and other emerging businesses, we expect the company's consolidated operating profit to continue to improve, and our shareholders to benefit from our long-term profitable growth. We remain deeply committed to disciplined capital allocation and balanced strategic reinvestment with competitive shareholder return. In short, we are currently experiencing a strategic transition in JOYY's business structure and reshaping our resource allocation, focusing on high-quality organic growth with the rapid advancement in our non-live streaming businesses. We expect 2025 will be a year of implementation and validation of our multi-growth engine strategy. I'm confident that our focus on value-effective organic growth will drive expanding business and financial benefits, ultimately creating lasting values for our shareholders. I will now turn the call over to Mr. Alex Liu, the Vice President of Finance, to provide our financial updates.
Thanks, Misty. Hello, everyone. Please note that the financial information mentioned during this conference call is presented on a continuing operations basis, unless otherwise specifically stated. In the first quarter of 2025, we recorded total net revenues of $494.4 million, delivering the higher end of our previous guidance. Our non-GAAP operating profit was $31 million, also exceeding market expectations. Building on Ms. Li's inspiring presentation of our strategy, we have made significant strides in diversifying our revenue streams and fostering a dynamic, multifaceted ecosystem. I will now dive deeper into our financial performance for the first quarter. Our live streaming revenues was $331.3 million for the first quarter, $351.6 million of which was from Bigo segment, in line with our expectations. In the past few quarters, we have been continuously optimizing our user acquisition strategy by prioritizing advertising spend on high-quality paying users in core markets, and simultaneously adjusting our revenue sharing mechanism by streamlining underperforming agencies and channels that fail to deliver positive ROI. This, together with the impact of weak seasonality, has led to short-term fluctuations of our live streaming revenue and user metrics. Our prudent and efficient operational resource allocation have yielded positive, measurable results. The percentage of total live streaming revenues from developed countries has increased by 2.8 percentage points year-over-year to 47.4%. The operating margin of our flagship product, Bigo Live, has also been substantially improved year-over-year. Our non-live streaming revenue was $123 million during the first quarter, contributing 24.9% of our total group revenues, up from only 17.4% contribution in the same period last year. This remarks a strategic transition in our revenue mix. In particular, Bigo's non-live streaming revenues, primarily advertising revenues, increased by 27.3% year-over-year to $80.3 million. As Ms. Li mentioned earlier, built on our high-quality, first-party global user traffic, technology and network infrastructure, as well as AI capabilities, Bigo Ads has emerged as a competitive programmatic advertising platform and attracted a meaningful base of global advertisers and publisher traffic. As we are currently accumulating in skill and enhancing our algorithm, we expect to further improve campaign performance and ROI for our advertisers, which in turn will drive our accelerating growth in our advertisers base and publisher traffic pool. At present, Bigo Ads has made a positive contribution to our bottom line. We expect it to be increasingly meaningful and eventually become another growth engine for our profit over time. Our other segments, non-live streaming revenues, was $43.2 million, increasing by 21.6% year-over-year. Group's gross profit was $178.6 million in the quarter, with a gross margin of 36.1%, while Bigo's gross margin was relatively stable. All other segments' gross margin was substantially up by 9.8 percentage points year-over-year to 41.7% due to segments' enhanced monetization, particularly growth in non-live streaming revenues. Our gross operating expenses for the quarter were $167.2 million, compared with $195.4 million in the same period of 2024. The decline in our operating expenses was in line with our current operating strategies across both live streaming and non-live streaming business. For our live streaming business, we have continuously optimized our sales and marketing expenses to enhance ROI. For our non-live streaming business, while it has shown robust revenue growth, we have maintained prudent and disciplined in spending, with operating expenses rising at a slower rate than revenue. Our disciplined execution has driven enhanced operational efficiency. Our group's non-GAAP operating income for the quarter was $31 million in this quarter, up by 24.9% from $24.8 million year-over-year. Non-GAAP net income attributable to controlling interest of JOYY in the quarter was $63.2 million. The group's non-GAAP net income margin was 12.8% in the quarter. Our non-GAAP net income was lower this year, primarily due to lower interest income due to a decrease in our cash balance as we fully repaid our CB in June last year and a lower interest rate. For the first quarter of 2025, we booked net cash inflows from operating activities of 58 million. Our balance sheet remains healthy with a strong net cash position of 3.4 billion as of March 31st, 2025. Now, moving to capital allocation. Shareholder return continued to be an important component of our capital allocation strategy. We have returned 49.1 million to our shareholders through dividends during the first quarter, and repurchased 22.5 million worth of our shares during the year as of May 23, 2025. Going forward, we remain firmly committed to unlocking shareholder value through our capital return initiatives. Turning now to our business outlook. At the group level, we expect our net revenues for the second quarter of 2025 to be between 499 million and 590 million. Our guidance accounts for certain seasonality fluctuations and reflects our preliminary views on the current market, operational conditions, and business adjustment decisions, which are subject to changes. In conclusion, the rapid growth of Bigo Ads and our other non-live streaming business has driven substantial progress in building a dynamic, global, multifaceted ecosystem. As we strategically realign our resource allocation to prioritize high-quality organic growth and operational efficiency, we remain confident in our ability to deliver sustainable, profitable growth and long-term value for our shareholders. That concludes our prepared remarks. Operator, we would now like to open up the call to questions. Thanks.
Thank you. If you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star 2. If you're on a speakerphone, please pick up the handset to ask your question. When asking a question, please state your question in Chinese first, then repeat your question in English for the convenience of everyone on the call. Your first question comes from Chong with Jefferies.
早上好，谢谢管理层接受我的提问。我有2个问题。第一个问题是关于我们下半年的展望的。管理层可以分享一下我们下半年预计的营收趋势如何，尤其是 Bigo Live。然后我们怎么看呢？下半年我们预计的营收费用还有利润的趋势。Thanks management for taking my question. I have 2 questions about the second half business outlook. Can management comment about the overall monetization trend in the second half, in particular for Bigo Live? And my second question is about cost optimization and the trend in operating expenses and the margin outlook in 2025. Thank you.
好的，谢谢你的问题。那我是 Vivi， 这个问题的话，我来回答一下。首先我想先稍微的解释一下，从这个季度开始，大家可以发现我们在这个整个的沟通策略里是按照直播和非直播收入类型来给大家进行沟通的，而并非以往的 Bigo 和 All Other 的板块来分类。这主要还是因为目前我们的直播业务和非直播业务的确处在不同的发展阶段。按照收入类型来讲，希望可以更方便的让大家理解当前公司的业务结构所发生的变化和趋势。
Thank you, Thomas, for your question. This is Ting Li. I will take your first question. First of all, you may notice that in our communications, in our recent communications, we will be giving updates based on revenue types, live streaming and non-live streaming, rather than the previous Bigo and all other segments. This is mainly because our live streaming and non-live streaming businesses are currently quite distinct in terms of growth momentum and phase of development. And updating by revenue type would make it easier for everyone to understand the trends and changes that is happening in our current business mix.
所以对于您的这个问题，我会尽量遵循刚才讲的这个分类结构来进行回答。那首先是我们的直播业务，总的来讲，我们的直播业务从去年3季度以来就进行了一系列的调整。这里有包括非核心语音直播产品玩法的调整，内容优化的这个分成的机制，以及副的 ROI 的合作渠道的这个去掉，还有内容安全体系的升级等等。直播收入的规模的确发生了一定波动，从环比的角度，这些调整都已经基本完全落地。那我们预期直播收入从2季度开始有望企稳，并恢复环比增长。在投放策略上，我们会继续基于动态的 ROI， 把预算向发达国家的优质用户去倾斜。而另外一个方面，在产品的功能和运营上，也会重点根据不同的用户分层，持续优化付费的玩法和用户权益体系的设计，提高付费转化率。从 Bigo Live 2到3月的数据来看，已经看到部分发达国家，比如说北美的营收，在付费用户的增长驱动下，率先恢复了月对月的正增长。在非直播业务方面，目前我们 Bigo 板块的广告收入和 All Other 板块的 Sachs 收入都维持超过 20% 的同比增速。随着非直播业务，尤其是广告业务在下半年进入旺季，我们预期它的环比增速还会继续加大。
So I'll try to answer your question in line with the previous mentioned framework and category. First, regarding our live streaming business. Overall, since the third quarter last year, we have rolled out a series of adjustments, including changes to the feature of our non-core audio live streaming product, optimizing revenue sharing mechanism, phasing out negative ROI channels, and upgrading the content safety mechanisms and systems. As a result, our live streaming revenue has indeed experienced some fluctuations. From a QOQ perspective, we believe that these adjustments have largely been fully implemented. Therefore, we expect live streaming revenue to likely stabilize starting since second quarter and resume positive quarter-over-quarter growth. When you look at our user acquisition strategy for live streaming, we will continue to prioritize our budget towards high quality users in developed countries based on real-time ROI. Simultaneously, we'll continue to optimize the design of pay features and user benefits systems tailored to different user segments to improve our paying conversion efficiency. We've seen some encouraging data from Bigo Live in February and March that the revenues in certain developed countries, such as North American countries, have already resumed to positive month-over-month growth, driven by increase in the number of paying users. And looking at non-live streaming businesses, our advertising revenue from Bigo segment and our SaaS revenue from all other segments are both maintaining year-over-year exceeding 20% in Q1. As our non-live streaming businesses, particularly advertising, enters into its busier seasons in the second half of the year, we expect our revenue sequential growth for both non-live streaming businesses to accelerate in the following quarters.
Thomas， 你好，我是 Alex。对于您的第二个问题，25年下半年的利润趋势和运营费用的趋势，我来回答一下。首先，我们先回顾一下一季度的表现。单独看 Bigo 板块的话，一季度的 non-GAAP 的毛利率是 35.5%， 经营利润率呢是 13.3%， 同比去年 Q1 都是有比较大的一个提升的。主要是因为在直播业务方面，我们优化了内容分成机制，而且获客策略升级，强化了 ROI， 所以导致 Bigo Live 的毛利率和经营利润率均明显的提升。那么单独看 All Other 板块的话，一季度 non-GAAP 的毛利率同比大幅改善，从24年一季度的 32.4% 提升到了25年一季度的 42.1%， 同比是提升了9.7个百分点，这主要归于 OR 板块非直播收入的增长。non-GAAP 的经营亏损额一季度是2650万美金，在业务淡季的情况下，比上个季度还收窄了23%，主要是由于我们非直播业务的支出方面是保持审慎，各项的费用环比明显下降。展望25年2季度的话，随着 Bigo 板块收入环比恢复增长，我们预期 Bigo 的 non-GAAP 的经营利润额也会恢复环比的增长。那么25年全年来看的话，刨除去年3季度我们对 Bigo 板块下非核心语音直播产品玩法做出的调整对利润的影响，我们预期25年 Bigo 板块整体的 non-GAAP 的经营利润额将保持稳定，并有望实现增长。对于 OR 板块，在变现增长、运营费用获得良好控制，尤其是研发费用占收入的比例稳步下降的前提下，我们预期25年板块的 non-GAAP 的经营亏损金额也会同一步的收窄。所以总的来讲，我们认为25年我们整体 non-GAAP 的经营利润额会在一个改善的趋势上。
And this is Alex. I will take your second question. First, let's have a quick look at our Q1 performance. For the Bigo segment alone, our non-GAAP gross margin for Q1 for the Bigo segment was 35.5%, with a non-GAAP OP of 13.3%, both showing improvement compared to our Q1 level last year. This was primarily due to live streaming business, where we optimize our content cost mechanism and also upgraded our user acquisition strategies to enhance ROI, leading to significant improvement in Bigo Live's gross margin and non-GAAP OP margin in Q1. For the all other segment, our non-GAAP gross margin also was substantially improved year over year, rising from 32.4% last year to 42.1% in Q1 this year, which was 9.7 percentage points increase, mainly driven by strong growth in our non-live streaming revenue in the segment. The non-GAAP operating loss for Q1 was 26.5 million, which despite being in the off-season, was narrowed by 23% compared to the previous quarter. And this was primarily due to our disciplined spending in our non-live streaming businesses, with a noticeable QoQ decline in our operating expenses, together with the impact of certain seasonality fluctuations in certain expenses. Well, looking ahead to Q2, with Bigo segment's revenue resuming to positive QoQ growth, we also anticipate Bigo's non-GAAP operating profit will also return, the amount of Bigo's non-GAAP operating profit will also return to positive QoQ growth. For the full year of 25, excluding the impact of the adjustment that we made to the non-core audio live streaming product features in Bigo since Q3 last year, we expect Bigo's overall non-GAAP operating profit amount to remain stable, with certain potential for growth in the full year. And for all other segments, we expect that with improving monetization and disciplined spending, its R&D expenses as a percentage of total revenue will continue to decline, and we foresee a meaningful reduction in its amount of non-GAAP operating loss in 25 compared to the previous year. At group level, we do believe that our group's non-GAAP operating profit amount will show an improving trend for the full year of 25. Next question, please.
Your next question comes from Leking with Goldman Sachs.
感谢管理层给这个提问的机会，想请教一下管理层，就是咱们目前新业务有什么进展，以及广告业务咱们这个快速发展的原因是什么，有什么优势，以及咱们如何展望这个未来的发展趋势。我先翻译一下。这个 Thanks management for the opportunity to ask the question, and can management share more updates on the new initiatives in the 2025, and also can give us more color on the underlying reasons behind Bigo advertising's accelerating growth and also the outlook for Bigo advertising? Thank you.
我是 Vivi， 谢谢您的问题。那这个问题由我来回答一下。Bigo Ads 就是广告业务，它分为自有广告和三方广告两部分。那么它的规模在快速发展的原因，我们认为有以下几点。第一点是基于广告主，广告主的预算它有多渠道高 ROI 的广告投放，存在这样的客观需求。那由于地缘摩擦、反垄断等原因，使得广告平台的市场的格局发生了变化，所以需求其实更加的迫切。第二点，从流量角度来讲，广告主的预算促进了整个 publisher 的拓展以及聚合平台的接入，推动了流量的规模能够快速增长。第三点是从平台角度，一方流量的资源加速了这个数据的积累和用户画像的构建，保证了投放效率和精准度，应用场景推动了模型的持续训练。那我们认为整个 Bigo Ads 广告业务盈利的原因会有以下几点。第一点是从数据角度来讲，月活超过 2.6 亿的一方社交流量的数据积累，我们用户数据的量级和数据颗粒度保证了精准投放的效率。第二点是从算法角度来讲，这里的整个的调控策略可以较好的控制广告投放的节奏，平衡广告主的预算消耗和平台之间的收益，有自身应用场景进行算法的训练和迭代，这里会有一个很好的基础先构成。那第三来讲，也就是基建，这里受益于整个的服务器架构等原因，前期基础设施的投入和建设发展的技术良好，而且把集团一直以来发展的这个边际效应的经济成本的这个优势都发挥出来了。所以总的来讲，受益于整个 JOYY 集团本土化的运营，广告主和自有流量的资源，前沿算法的模型和全球网络基础设施共享等优势，我们的广告业务连续几个季度保持环比较快速的增速，并且能够持续为 JOYY 集团贡献正向的利润。我们对广告业务长期的营收和利润的增长潜力充满信心。
Thank you, Luxing, for your question. This is Ms. Leking. I will take your question. Why Bigo Ads can accelerate growth? First of all, when we talk about Bigo Ads, we refer to both its in-house first-party traffic and also the third-party traffic advertising revenue. And when we look at that, we look at it from both the advertisers' perspective, our traffic pool, and also the embedded advantage that we empower as a platform. First of all, let's look at advertisers' side. We believe that it's an answer to the growing advertisers' needs. We've noticed that advertisers need to allocate their placement budgets across multiple channels, and they demand a high ROI for their ad investments. And factors such as geopolitical tensions and anti-monopoly measures have led to changes in the advertising market that cause advertisers to demand a further diversification over their placement channels. And second, because we have those existing relations with the advertisers, such relation has driven publishers and aggregation platforms to join our network, leading to a platform rapid growth in our traffic pool of Bigo Ads. And thirdly, because of those extensive user base and years of quality data, and also our deep expertise and knowledge in user profiling, that was the foundation of effective and precise targeting, and enabled us to deliver a positive ROI for advertisers. And as we continue to roll out a deeper training of our model, we expect our specific user scenario is going to improve our model, which is going to bring further improvement in our delivery results to the advertisers. And you've also may notice that we've mentioned that Bigo Ads in general as a whole has already begun to make a positive contribution in terms of operating profit. And we believe that the reason that we can achieve profitability at such a scale is due to a few reasons. First of all, it's always about ROI. Because of the fact that we have approximately 260 million first-party user traffic together with third-party traffic that is accumulating, and that we have the AI-empowered user targeting model, enabled us to deliver a positive ROI for advertisers. And together with an in-house algorithm such as our pacing strategies, which can optimize our ad delivery to balance advertisers' goals. For example, they have a higher ROI goals, but we can balance it between their goal with our platform revenue. And that actually, as we continue to improve our vertical model, we expect that our algorithm is going to help us efficiently balance our advertisers' needs and our own revenue growth. And thirdly, Bigo Ads obviously benefits from the group's prior investments in our global infrastructure, network infrastructure, and also our R&D infrastructure. And that enables Bigo Ads to enjoy strong economic advantages with lower cost per unit. So in summary, our advertising business has delivered consistently strong growth in the past quarters and continue to be profitable for the company. And this success actually comes from our localized operations, our existing advertisers and traffic pool, our industry-leading algorithm, and also our global network infrastructure. Given this proven strength in our growing market position, we are confident that our advertising business is going to contribute to long-term growth to our revenue and profitability. Next question, please.
Your next question comes from Rafael Chen with BOCI Research.
谢谢接受我的提问啊，我的问题是能否请管理层分享一下股东回馈及奇葩资本配置的考虑。Thank you for taking my question. Congrats on the solid quarter. Could management give us some insights about shareholder return policies and other capital return strategies? Thanks.
你好，谢谢你的提问，我是 Alex， 我来回答一下关于股东回馈的问题。首先，股东回馈依然是我们公司资本配置的重要的组成部分。一季度我们持续推进股东回馈的执行，完成了分红是$4910万。那么截止到5月23号，累计回购股票是$2250万，持续兑现为投资人提供行业有竞争力的股东回馈的这个承诺。此外，也如庭总刚刚分享的，我们也在时刻审视我们当前的团队和基础设施的配置，根据业务的发展阶段和发展情况，合理的、谨慎的进行资源配置。目前来看，直播业务有较为稳健的现金流，我们正在积极优化资源配置，提高 ROI。而对于非直播业务，如广告和 SaaS 业务正处在加速发展的阶段。短时间内，我们会在保持边际效率改善的大趋势下，谨慎地安排 SaaS 和广告业务的团队扩张以及市场的投入。长期来看，我们会持续通过审慎高效的资源配置，帮助公司进一步的深化竞争优势。我们对长期持续推动公司全球业务营收和经营利润的多元化增长，同时保持有竞争力的股东回馈，还是非常有信心的。谢谢。
Thank you, Rafael. This is Alex. I will take your question on capital allocation. First of all, shareholder returns remain a key component of our capital allocation strategy. In the first quarter, we continue to execute our commitment to our shareholders, distributing 49.1 million in dividends and repurchasing 22.5 million worth of our shares as of May 23rd. Consistently fulfilling our commitment to provide a competitive return to our shareholders. Additionally, as Ms. Li just shared, we are also actively monitoring our business development and resources and carefully assessing long-term capital allocation opportunities based on the current stage and performance of our respective businesses. Currently speaking, the live streaming business maintained a relatively stable growth in cash flow, and we are actively optimizing our resource allocation to improve its ROI. Meanwhile, for our non-live streaming business, such as advertising and SaaS, are in a phase of accelerated growth. In the short term, we expect to prudently expand our headcount and marketing resources to these non-live streaming businesses to support their growth while maintaining improving trends in their respective economics. In the long term, we will continue to enhance our competitive advantages through prudent and efficient resource allocation. We remain confident in our ability to drive sustained, diversified growth in our global revenue and operating profit while maintaining competitive shareholder returns. Thank you. And that was the last question. Thank you so much for joining our call today.